streaming. Let's go live streaming. We got Georgia on our minds. Hey, Patty, Kevin, and John. John Gearhart. And look what I got in the mail today, everybody. This is pretty cool. Actually, it is rocket science. NASA. It is rocket science, financial planning. Pretty cool, huh? And then, oh, look at that, NASA. Pretty cool. Want to get one for the Space Force or whatever it's called. Oh, man. Okay, so now we can get started. Whew, Jeremy's here. We can get started, everybody. Whew. I was worried. I said, where's Jeremy? If Jeremy's not here, we can't get started. But he is here, so we are good to go now. Woo. Que paso, Hans? Jill, retired 2019. Jim Hogan, haven't seen you around these parts before, I don't believe. But, all right, we'll start with my man. I just saw a thing here. By the way, I'm tired. Because, why am I? Oh, Liam wanted to stay up and watch the stupid NBA finals last night. And so he went to bed around 11:15. But, of course, the dogs weren't ready to go to bed because the dogs are used to Chloe putting them in bed. And as such, I had to stay up after Liam went to bed. And the worst rated NBA finals in history, other than the bubble, by the way, just FYI. You go woke, you go broke, man. The worst rated NBA finals in history is crazy. I mean, it's like 47% off the 2019 finals, which had Toronto in it, and they don't even count Canadian teams, which is interesting. Which is also not kind of nuts too. So I'll never forget when we had, I think it's Colorado and Edmonton, or Colorado and Calgary, or something like that. A horrible NHL Stanley Cup. I'll never forget. Colin Cowherd said the NHL is dead. They're not getting ratings because they don't count. They don't count Edmonton or whatever it was, the other team in Alberta. You don't count them in the TV ratings. They just don't. Wait till Toronto goes in. And then Toronto went in 2019, and the ratings this time with Milwaukee and Phoenix are off 47%. Could not happen to a nicer group of people. However, I do like that guy Giannis. That's pretty cool. So I was happy to see the Bucks win. I like the guy Middleton. Just says, I like basketball. I've liked basketball for a long time. I don't watch it. I don't watch really any sports anymore. I'll take the kids to go see some minor league baseball and minor league hockey. But, other than the Bruins going to Stanley Cup Finals against St. Louis a couple of years ago, I haven't watched. I mean, and, I just don't watch sports. Frees up a lot of time. I'm telling you, man, if you're looking to, you say I'm too busy, look at your sports watching, because you stop watching sports. It frees up a lot of time, my friends. A lot of time. Anyway, so Jordan says, is there anything wrong with putting my entire investment portfolio in stocks in my 20s while I have time to bounce back from crashes? Nothing wrong with that, but just got to remember that, if the market's down, I mean, look, man, as always, 2007, 8, 9, 2001 and 2, 2007, 8, and 9 were worse, though. If you got, a 57% or whatever it was in the S&P 500 decline that coincided with you losing your job, and on top of that, your house is underwater, you're SOL, dude. You're SOL. So, I mean, it's just, is that likely to happen again? No. Could it? Absolutely. And so you don't want to be SOL, that's for sure. But at the end of the day, is there anything wrong with it? No. I mean, I tell you, man, I think the priority would be to make sure your debt's paid off for sure. But no, I got no qualm with that. None whatsoever. I was talking to a guy today. We're talking about carbon capture from these oil firms. He was talking about these cryo plants. I can't remember, cryo something plants. And he was just like, man, they're hey, Mike on Facebook, right on. Got 4 people on Facebook. Hey, everybody on Facebook. He was saying the idea that we can capture carbon and any consistency is just, it's nuts. And that's what he used to literally do for a living is, oh, hold on a second. There you go. Go see what Mama's doing. It was crazy. And he was telling me about how it works. I was like, man, this is insane. It's very, very interesting. So just FYI. So I'm using carbon capture technology to buy carbon credits. Yeah, it's all such a fake bill of goods. All right. All right. You like those shirts, did you, Patty? All right. Yes, it is rocket science. Pretty cool, huh? My man from Huntsville sent these to me today. That's pretty cool. Kevin from Rochester, Don. Hey, latest. I haven't heard anything on WEP, man. Haven't heard. Is there something going on WEP? I don't know. I haven't heard anything. I'm not sure what's happening with a windfall elimination provision. I don't know if there's anything coming down the pike. If anyone knows, put it in there. I don't know. After Extreme during the NHL expansion draft, you can watch my man, the hockey guy, Shannon over at the hockey guy. Like say Shannon, eat pearly yellows. I just ate some broccoli. And the worst thing is to get some broccoli stuck in your teeth. That looks bad. Watch my man Shannon at the hockey guy. He'll get you up to date on that, my man. He'll get you up to date. Hillsboro, Oregon in the house. Right on. Finding Dory is in the house with Nemo. New Beetle live chats. Right on. Cottage Mill. All right. Welcome. All right. So here we got Fear the Deer, says Derek. Derek's like the only one who actually watched on TV, apparently, because all right, so here we go. We got MD, Maryland. All right, I retired on October 8th, 2021. Not that anyone's counting down the days. Got $32,000 a year pension, $142,000 in traditional IRA, regular account 44, 457 with 140. Okay. I wouldn't. All right, so he says I'm single. All right, so he's got, let's see, 142.8, we'll just say 300,000 roughly in brokerage accounts. In non-IRA accounts and not in tax deferred accounts, non-IRA accounts, but I mean tax deferred. That's what I meant to say. And he's single, no kids. I'm not sure how old he is, but is it a good idea to do Roth conversions? I wouldn't. I just spend down that money first, to be honest with you. I'd spend down. Look, man, a lot of times it doesn't make sense to do Roth conversions if you're single. If you're single with a pension, no way, man. You're already in the 22% tax bracket. Are you ever going to be in a higher tax bracket in the future? No. So I wouldn't. I don't see any benefit for that at all. A single guy with a pension, hard to make a case for doing Roth conversions. All right. Right on, Johnny. Appreciate that. All right. Keep up the great work. You got it. All right. Any opinions? Okay. Carolyn says, any options to roll over pension while still employed? I'm 57. It depends on if you have what's called an enforced distribution. Do they allow you to do that? Now, we just got to be careful here because, believe it or not, your pension might still be the best game in town. It really depends on what your pension payout is going to be, Carolyn. So just because you can roll it over doesn't mean you should. But what your employer will say is you have an enforced distribution. That means you can take a portion of your plan and roll it to an IRA while you're working. Some employers allow that, some don't. So if your employer has an enforced distribution potential, maybe, but you're only 57 years old too. So if you do roll it out of your employer sponsored plan before you're 59 and a half, you're going to lose the post 55 rule, which says you have access to that money as long as you separate from service post 54. Really, it's 55 and above. And you keep the money in your 401k plan, your deferred plan, if that makes sense. So I'd be hesitant to do that, frankly. I think there's too many balls that could in the air that you need to look at first. If I had $1 million or you come to all one fund and spread out, I just talked to some people today. Well more than $1 million, $3.5 million, 500,000 in Ginnie Mae, the rest in Wellington. Just that simple, man. So if I only had $1 million, if I only had $1 million, I'd put, I'd do 200,000 in Ginnie Mae and 800,000 in Wellington, And I use Ginnie Mae synonymously with my cash bucket, by the way. So I do, again, it depends on how much money you need, how we'll do it. I get all that. But just for simplicity, 20% Ginnie Mae, 80% Wellington. Of that 80%, the bonds are 35% of that 80% is bonds. So 0.35 times 0.8. So you're going to have 28%. You're going to have almost a 50-50 portfolio. So if you did, let me draw this up. If I can find my marker. My NASA t-shirts are in the way. Can't find my, oh, there it is. All right. More markers. All right. So in this case, we got 200. All right. So what's happening here is we got 200 and Ginnie Mae, and then 800,000 in Wellington. Of this 800,000, essentially 280 will be in bonds, and whatever 520 will be in. This is, in my opinion, this is going to be a pretty hard portfolio to beat. So in this case, this is good. And now this is a 3-bucket portfolio, which is why I like Wellington, because it gives us a 3-bucket without really have to do anything. 200,000 Ginnie Mae, 35% Wellington is in bonds, 65% Wellington is in stocks, 200,000, 280 in bonds, 520 in stocks. You have to be hard pressed to beat that. That's going to be a tough portfolio to beat. They'll give you some inflation, give you deflation. Ooh, speaking of which, I'm going to pause the questions real quick. I want to show you guys something. This is incredibly interesting. All right, so just as an FYI, I do not want to be a deflationary bandwagon guy. I believe we're going into deflation. The same guy today who does the carbon capture stuff, who has since retired from that kind of line of work, he made a point, which is I think is freaking fantastic, is that the price to earnings ratios of the Nikkei in the run up that ended in 1989 was significantly higher than the PE ratios of the United States today. So his observation was that the Nikkei got smoked, but the reason it got smoked was because it was so highly valued, well higher than the U.S. today. And I 100% agree with that, 100%. I do not think the valuations of stocks are nosebleeders, not by any stretch of the imagination. And the reason I say it is because the bond rates are so low. You got to look at everything in the context. But with that said, just because we're not a nosebleeders doesn't mean we can't hit a Japanese light with pretty significant downturns. And this guy wasn't saying we couldn't either. He was just making an observation, which I completely agree with. The point being is we don't have to go full throttle Japan to be in a world of hurt, man. We don't. We go half Japan, we're in a world of hurt, if that makes sense. It's just that simple. And so the point being, I don't want anyone to sit there and say, Josh, you're always deflationary. I don't want to be pigeonholed, because I could be wrong. Anyone could be wrong. But I do believe in deflation is coming, and I want to share this with you because it's such a good. These guys are fantastic. I'm a big fan of these guys here. They have a YouTube channel. I didn't think it was all that. I mean, it's fine. You should subscribe to it. These are called. This is can you all see it? Yeah. Real investment advice. This guy Lance Roberts. Every time I see his name popping up, I'm just recent to his writings. But every time I see his name and the other guys are real investment advice, I'm starting to get that tingle down my leg, like David Brooks got with Obama when he saw the crease in his pants. I knew he was going to be a good president. But anyway, so I'm just recent to these guys. So like, if they got a YouTube channel, by all means, subscribe to them. Don't know these guys from Adam, but the YouTube channel is fine. I just but whatever. But I like the way they write. So anyway, I want to show you guys something here. This is. Monetary policy is not expansionary. And we're just going to skip down to a couple of things. All right, so I want to show you right here. Fed actions are deflation or disinflationary. I won't say deflationary, disinflationary. All right. So this is the issue. Given the Fed is buying 100% of Treasury bills plus other bonds at auction, I believe the Fed is manipulating bond yields lower. This is what some guy said in his comments. That's interesting, but I just want to keep going down. Fed buying drives rates higher. Fed buying drives rates higher. Check this out. And I'm telling you, The majority of the inflation and economic growth pressures are artificial, stemming from the stimulus injections over the last year. All right, whatever. However, with those inputs fading and year-over-year comparisons become more challenging, the deflationary impact could be more significant than expected. There's another point about the Fed tapering the purchases. As shown in the chart below, rates rise during phases of QE, quantitative easing. The Fed buying, rates rise as money rotates from bonds to stocks. The opposite occurs when they start to taper, suggesting a decline in rates if taper talk increases. That is so counterintuitive, and it's going to make sense in just a second. And this is the thing, when you just come back to, was it Occam's razor? Was it Occam's razor? Whatever it is called. The simplest thing is usually the solution. So going back to, given the Fed is buying 100% of the T-bills plus other bonds at auction, I believe the Fed is manipulating bond yields lower. This guy's argument, let's see, there's another point about the Fed tapering purchases. Rates rise during phases of QE as the money rotates from bonds to stocks. The opposite occurs when they start to taper, when they stop buying the bonds. A decline in rates as the taper talk increases. So when the Fed begins to get back to backtrack, the bond yields go down. It's kind of what's happening right now. Lots of taper talk lately, and the rates, the 10 years, I think, just still at 1.3, which is off from 1.75 from just a couple months ago. So the 10 years right now is at 1.28. No one predicted that because everyone was under the assumption that the Fed is buying up all the bonds, thus driving the interest rates to low. So if the Fed stops buying the bonds, the interest rates will go up. And this assumption is exact opposite. And this makes sense. Such is because after more than a decade of monetary interventions, the Fed has created a psychological link between QE and the equity markets. As a result, the liquidity provision creates an asset preference of risk on assets, stocks, versus risk off assets, bonds. That is so incredibly counterintuitive. So basically, when the Fed is buying all these bonds, essentially people are saying, I have more room to grow in stocks. Stocks have more upside because the Fed buying bonds is decreasing the interest rates. So I'm going to pull my money from bonds because also I'm getting a higher basic cost for it. I can sell it higher. I'm going to take that money and put in risk on assets, stocks. It's insane to me, but it makes sense because check this out. So as a result, the liquidity provision creates an asset preference when the Fed is buying up the bonds. So people are actually selling their bonds while the Fed is buying to put those into stocks because they know that the Fed is buying up the bonds, thus going to run the interest rates lower is what they think. And what happens, you guys might not have heard this, but the rule 101 from way in the past, don't fight the Fed. When the Fed is raising interest rates, stocks go down. Don't fight the Fed. When the Fed is buying bonds, interest rates go down, stocks go up. But the interesting thing is they're taking money out of the stocks or the bonds because the Fed is buying them to put into stocks, raising the asset bubble of the stocks, and at the same time reducing the band essentially. And so what's happening is that because the Fed is buying and they're sellers, it's essentially driving the interest rates up. It's insane. I find that to be remarkable, but it's more than just that. Don't fight the Fed. The Fed is raising, stocks get hammered. That's a brokerage from way back. So the Fed is raising, they're loosening by buying bonds. The rates are going down. When rates go down, stocks become more attractive. People say, if the Fed is buying, I'm going to get into stocks because stocks go up when the rates go down. But the counter of that is the rates start going up because more people are getting out of the bonds than the Fed is buying. It's crazy. I tell you, I never would have thought about that. All right. But here, the government spending has a negative multiplier. This is huge. He also talks about velocity too. And I'll share you some velocity in here just when we come back right here. Another way to view is looking at monetary velocity. Monetary velocity, or M2V, measures the rate at which money moves through the economy. As shown, velocity continues to plummet as the banks contract their lending. Now, he's kind of, I kind of think they're looking at the bank. So, where does he say right here that the banks are right here? He's basically saying there's less lending because banks are in a more protectionary mode. I don't think that's true at all. I think there's less lending because no one wants to borrow. People are like, I'm not borrowing. And that's what happened in Japan. Anyway, so here's a velocity of money in the black here. I mean, just look at this. It's gone from 2.1 to freaking 1.1. It's gone down in half. Now you can see there's somewhat of a trend line for the orange is banks lending. You can see a trend line kind of going down like this a little bit. The velocity of money, on the other hand, the trend line from right here in 1998 is, look at that, man. I mean, that's freaking nuts. The interesting thing is the velocity of money wasn't that high in the 74, 75. So that's interesting. And we had relatively high inflation. We really started ramping up the inflation right here. So can you make a correlation between a causation, I should say, between velocity of money increasing inflation? Yeah, here you could. Inflation, yeah, there was some in the 90s. But look at that. Nuts. I mean, look at this. The velocity of money has dropped off the building. Look at that. It's crazy. And so from 1998, the velocity is it's insane to me. So here it is. We have a little bit of a dead cat bounce. That's the epitome of a dead cat bounce right there. Boink. You fall off the Empire. You throw a cat off the Empire State Building. I know this sounds horrible. I don't know why people say dead cat bounce, but the old school brokerage, of which I am one, that's what we say, dead cat bounce. Falls off the Empire State Building and gets crushed, but even the force of it's still going to bounce a little bit. There's a bounce, and then the cat's going back. And I hate that term, but there it is. All right, but check this out. Right here. Government spending has a negative multiplier. And I see who's writing this, Veronique de Rougy from my alma-mater, George Mason University, Mercatus Center. And anytime Veronique writes, I want to read it because Veronique will kick your butt. She is awesome. I'm not sure who Jones is off the top of my head, but I do know Veronique. But here's the problem. Excess debt has a 0 to negative multiplier effect. The multiplier looks at the return in economic output when the government spends $1. If the multiplier is above 1, it means that government spending draws in the private sector and generates more private consumer spending. This kind of goes back to if we build the Bank One ballpark in downtown Phoenix, that will create growth in downtown Phoenix. It never works. It's all facade. Government-funded, taxpayer-funded stadiums are a complete scam. A complete taking of the taxpayers in that city to give to rich, wealthy business owners, major league teams, and the employees and the athletes. It's a complete reverse Robin Hood. Always vote against government funding of stadiums, always, because all you are doing is you're taxing yourself and your neighbors down the street and all the poor people with a higher sales tax in order to make the owners filthy rich and the players filthy rich, and they can all kiss my butt. So basically the idea is, well, if we create this stadium, it'll have a multiplier effect and create all these jobs and all this extra revenue, which will be then increased velocity of money, and it's completely fake. But they do it because the politicians love having their names on the stadium. It's just all there is to it. Now, sadly, a lot of you guys vote for it, and you shouldn't. Don't ever do that again. If I catch you voting for publicly funded stadiums, get off my channel. I'm just joking. Not really. All right, if the multiplier is above 1, it means that government spending draws in the private sector and generates more private consumer spending, private investment, and exports to foreign countries. So by the government spending, we're drawing in more private sector money, creating more than what the government spent, in which case they borrowed. So has a negative effect or a positive effect of more than 1. If the multiplier is below 1, the government spending crowds out the private sector, hence reducing all the taxes. You have less money to spend as a private business or as a private individual because you got to pay taxes to cover the government spending. And as such, you're not going to invest. And as such, the multiplier is less than 1. All right. So it reduces it. The evidence suggests that government purchases probably reduce the size of the private sector as they increase the size of the government sector. On net, incomes grow, but privately produced incomes shrink. All right, so check this out. If you think that the Federal Reserve's current monetary policy is reasonably competent, then you actually shouldn't expect the fiscal boost from all that spending to be large. In fact, it could be close to 0. This is before taking future taxes into account. When economists like Robert Barrow and Charles Redlich studied the multiplier, they found once you account for future taxes required to pay for the spending, the multiplier could be negative. Monetary policy in its current form is not helping the economy. As a result, the Federal Reserve has lost the ability to influence economic growth. Yeah, we'll see, man. The Federal Reserve has no real options unless they're willing to allow the system to reset painfully. I completely agree. Unfortunately, we now have a decade of experience of watching monetary experiments only succeed in creating a massive wealth gap. Going back to the rich are getting richer because of the asset bubbles that very few of us own that much of. Just the top 10% are getting the bulk of the asset inflation. And then on top of that, just like I said, with the taxpayer funding stadiums, the rich are getting that 100%. They're getting wealthy off your tax dollars. Most telling is that current economists' inability to realize the problem is trying to cure a debt problem with more debt. I could not agree that more. Let's borrow to correct our borrowing from the past. And at some point, you just run out of the credit card. Just that's all there is to it. So at some point, somebody just, like for you and I, the government will never run out of the credit card. But you and I, we cannot keep doing balance transfers and balance transfers and balance transfers to pay off other credit cards. We can't. At some point, the bank will say no more. Now, the government can print unlimited for sure. They absolutely can, because that's the benefit of being the government. This is where the whole premise of MMT comes in. But I think some interest as well. Modern monetary theory. The government can't go broke. The question is, that's great, but what happens to the economic growth when the government is spending all this and crowding out everybody else? Is there any economic growth? There's a sugar high. And because of the sugar high, ultimately it'll wear off, and then you're going to go back to sleep because you're tired as crap. And you're going to go to bed. And that means the economy is going to not have the huge inflationary. It's going to slow down gradually, deflationary. In conclusion, the Keynesian view that more money in people's pockets will drive up consumer spending with a boost of GDP has been wrong. It hasn't happened in 40 years. I cannot agree more. And it's certainly not happened in Japan. The reality is that monetary policy is not expansionary, but rather contractionary. Unfortunately, deflation remains the most significant threat as permanent growth doesn't come from artificial stimulus or debt. But such is a lesson that has yet to be learned. Such a good article. Let me just put this in the notes here. Then you can read all the charts and stuff. It's just amazing. It's amazing how many. Look, at the end of the day, will this guy be right? Man, I got no idea. No one knows nothing. And we can argue all day long on, hey, my wife gave me a thumbs up. We can argue all day long on, who's going to be right, who's going to be wrong. No one knows nothing. But at the end of the day, before you start rushing out and leveraging your house 90% loan to value, because inflation is coming and inflation destroys the people who loaned you the money, and it helps the debtors, but it destroys, it helps the debt, whoever's in debt, it helps the people who are in debt, but it hurts the lenders. I'm just telling you, man, there's another side of the story that you got to rectify. How do you explain Japan? How come there's no inflation in the United States, given we've been spending like drunken sailors since Reagan? How come? Really, even before that. All right. All right. $1 million saved, age 54. Can I stop? All right, my friends, tell Kevin what we're missing here. What we missing? Yeah, minor league sports are fun. I like minor league sports. I tell you, I was talking to a guy yesterday. or 2 days ago. I said, man, I'd love to be like, just go to the Rome Braves team and just, work there part-time, stands and concessions and all that. I mean, not concessions. I wouldn't want to work concessions, but, just be one of those guys that work the stadium. I love baseball stadiums. Baseball stadiums just make me happy. They do. Can you put money from a tax or brokerage into a Roth account? Sure, absolutely. You're going to sell it. You're going to have to sell the money. Yes, but you can only put $7,000 a year if you're over 50. So yes, the answer to your question is yes, 100%. Only cash can go into your Roth. Only cash can go into a Roth. So whatever you have in your brokerage account, you have to sell, generate the cash to put in your Roth, and you can only do $7,000 per year. But yeah, absolutely. Noonan, Georgia, checking it right on. Jill says she's not an Indiana Pacers fan. Oh, but she was. Yep, never thought I could. She used to be a Indiana Pacers season ticket holder for 20 years, my friends. Never thought she had. Yeah, it's crazy. Season ticket holder, crazy. By the way, I'm going on a sugar boycott. My first day with a sugar boycott because I love my sugar. But man, I was when the wife and the kids were gone. I made up a batch of oatmeal chocolate chip cookies. I ate those suckers in the morning, and I ate ice cream at night. I said, man, I got an addiction. I got reel this in. Can a business owner pay their children directly into the child's retirement account so neither the business nor the child have to pay taxes? This only works for children of the business owner. I don't know. I don't know. That's good. I don't know the answer to that. It's a good question, though. Triple Qs. Jeff says he quit watching sports so he can watch more Heritage Wealth Planning YouTube videos. That's what I'm talking about, Jeff. Right on. North Carolina. Charlestown, West Virginia. Right on, man. Get those horses going. Charlestown. Yeah, Charlestown, right? Got the horses in Charlestown, West Virginia, Tina. Bet on the jockey. All right. 2.5 years of retirement to Eleanor Walsh. You got it. Right on, Eleanor. You got it. Reverse repo market. I mean, I had the slightest idea. No one ever talked about a repo market till I guess last January. And then when COVID came up, it just fell off a cliff. I don't know what reverse repos are. I chuckle at all these people who say it's been going on for years. I said, look, man, I don't know what it is. Could we learn? Sure. It's just more financial porn, man. It's all there is to it. Like, it was just more stuff to get people. Oh my goodness, reverse repo market. When I first heard the repo market, it was probably December of 2019. I said, what is all this talk about repos? All these people losing their cars? That's literally because repo means a repossession of vehicle. And I said, are the people having, and I was scared. It's like, are so many people not paying their car debts that there's massive amounts of repos going on? So I don't know what it is. You don't need to know what it is. It doesn't matter. I mean, does it matter in the overall scheme of things? Sure. I've been in this business for, basically since 26 years old. I'm 51 now. Yeah, 27 years old. I'd never heard of repos until last year. Doesn't mean it means anything. No, I just said at the end of the day, Of course, I never heard of mark-to-market accounting either, and that turned out to be a big freaking steaming pile of crap that crashed the economy. So maybe the reverse repo market will too. I don't know. What are you going to do about it? I don't have the slightest idea. You got Danny? All right. I watch all the time. What do you think of the financial advisors at Ed Jones? By and large, I got no qualm with Ed Jones. Every Ed Jones guy is different. Every office, you got some guys that don't know their butt from a hole in the ground. You got other guys that have been around for a long time. I got no qualm with them. And I like their conservative organization. I pretty much like the way they do business. I've known a ton of people at Ed Jones. I think the model that Ed Jones does is actually better than the AUM model. The AUM model, the fiduciary model. I'm a fiduciary, so I don't get paid on commission. So I'm looking for your best interest. No, you're not, because you're charging too much. And I say this as a broad brush. I'm just telling you. My man Dustin over at Jazz Wealth doesn't charge too much, in my opinion. Some people would say he does. I don't think he does. I think it's like 50 basis points at $250. That's well deserved money for Dustin because he does good work. At the end of the day, some of these guys are charging 1 to 1.5 on an annual basis. And that they're holding themselves as fiduciaries. I said, how can you hold yourself out as a fiduciary if you're charging $10,000 a year on $1 million portfolio on top of whatever investments you're using? I don't find that to be. I don't get it, because let's just say, for instance, I have $1 million. I go to Ed Jones and I buy $1 million worth of American funds. I get it at NAV, which means the sales charges are waived. There is no sales charge. The only fee I am paying on, and I mean, every situation is different. I'm just using this from my old brokerage days, is a 25 basis points trail. All right. And the trail is simply just, and I don't even know if they still do this anymore. A trail is a service charge, essentially, for me to manage the account. So I'm getting paid $2,500 a year on a 12B1 fee to manage the account, to make, just basically make sure that it's still working. That's it, man. That's it. All right. So if I had $1 million, go to Ed Jones, and you're not paying any sales charge. You're paying 25 bips on top of the whatever mutual funds they put you in, American funds. We'll say when it's all said and done, you're paying 65 basis points all in, no front end commission. Versus a guy who's charging 1.25. It's not even close. Not even close. Who's more responsible of an advisor? Not even close. It's the Ed Jones guy every single time. And if I'm paying on a $250,000, I'm paying Class A shares at 4.5% commission. All right, so I lose 4.5% up front. What's that? $9,000 or something like that. I guess 10,000, whatever it is. So I'm down immediately. We'll just say $10,000. I got to pay a front end sales charge. On top of that, I pay 63 basis points or whatever for the 12B1 plus the fees for the fund. I will still be ahead of the guy who's charged me 1 to 1.25 over the course of my relationship. And so when people say, well, I'm a fiduciary, I don't charge commissions, I say that in of itself, that right there tells me you're charging too high. I'm just telling it right now. Can these guys, so what happens, a lot of these guys who don't do, who are fiduciaries, and they just assets under management, there's something called reverse churning. Reverse churning is they put you in these fee-based accounts and then you never hear from them again. Now, in of itself, that's not a bad thing that there's no activity in your portfolio. But the question is, are they actually doing anything for the fee? Are they talking to you? Or are you just getting a letter every year from the brokerage, the firm, the custodian says, we just got to make sure that, for SEC, that you're still a conservative investor, you're still making, $15,000 a year in income, blah, blah, blah. You'll get a letter like that every year confirming that you are still the investor you are. Thanks. We'll see you next year, but thank you for paying us $8,000 a year. That's freaking nuts, man. At least with a commission guy, you paid all up front, and there's no debate. Now, what's starting to piss me off about Ed Jones is they put a lot of people in these A-share accounts. And I don't say a lot. Some of these guys are trying to move them now to fee-based accounts. And I find that to be, that's ugly. I'm surprised their compliance allows that to happen. So basically what happened is, 10 years ago, you got American funds at A-share, 4.5% commission. Now they start rolling out these fee-based accounts. There's a new broker in the office. A new broker didn't get the commissions on the stuff that's sold to you. So the new broker says, I got to get paid on these accounts. I'll only get paid by putting these in fee-based accounts at 1 and 1.5 after you've already paid a front-end commission. That should be illegal, man. That's churning right there. That should not be allowed. If you pay the A shares, you should get a waiver of any future fees. That's all there is to it. If you already paid the A shares. And I find that's happening more and more, not just with Ed Jones, but other firms as well. But Ed Jones is the big one because they're good. They have a lot of offices throughout the country, and a lot of these guys have good relationships with their clients. The sad thing about Ed Jones is there's a lot of turnover, and the new guys that take over an office, they got to generate revenue somehow. And I don't see how that. I don't like that at all. So anyway, in of itself, I got no problem with A shares. I have a huge qualm with fee-based accounts when they're saying I'm a fiduciary. That's not Ed Jones, but I also have a problem with churning, where you pay the A shares on the front end load, and later on down the road they say that account's not that good anymore. Let's put you in this fee-based account. Yeah, that's double billing. That's not kosher. PEI in the house. I'm never going to Prince Edward Island. I was telling Ross the other day is that I guess my days of ever going to Canada are now gone because they mandate a jab and I ain't getting it. So I guess I will never see the shores of Prince Edward Island, and all my tourist money will be gone. And that's too bad. Too bad, Trudeau. But what's Trudeau? He follows his dad's footstep, Fidel Castro. So Fidel Castro is nodding fiercely from his grave in hell, saying, Justin, you're doing right. Keep those Americans out because they'll spread evil thoughts of freedom among the Canadians. We can't have freedom in Canada. If you're not vaxxed, you can't go to Canada. That's what's going on. It's crazy. I don't know what I taught is, so I don't know. I'm not sure what that is. Josh Live, the way it should be. Yeah, thank you, man. Is it bad to own rental real property that's cash flow positive? No. I don't know what 15% cash on cash means, but if it's cash flow positive, man, I'm telling you, I did a video on this just the other day. It's like, dude, I had a guy who was getting he was only netting $200 a month right now on his rental. He's got in Tucson someplace. He's got a condo. I paid like $71,000 for it. Right now, he's only netting $200 a month. So he's like, man, I should sell that because I'm not making that much money. I said, whoa, hold on, cowboy. Your mortgage is being paid and you're still walking away with $200 a month. In a few short years, that mortgage will be paid off by your renters. And on top of that, you're going to walk away with $750 a month, free and clear. And he hires a property manager. That's free and clear of the property manager on a $71,000 investment. If you look at yield to cost, $750 a month times 12 divided by $71,000 is a 12.6% distribution rate. That's and I'm not even talking about any kind of write-offs you get either. That's nuts. That's nuts. Don't do that. I told that guy. What are you going to do? You're going to put in a friggin', I don't know, FedEx stock or some dividend stocks that pays 3%? Nah. And all the risk of stock market? No. Are these good times to be in VWINX or VDIGX? I own VDIGX. Or should I stick to my 401k target year index? Thank you. I mean, I like both those funds. I mean, are they good times? Sure. Yes, I own VDIGX, so inherently it's good times for me. Good times. Remember good times? That guy, JJ, Dynamite, JJ? Yeah. Who was Roger? Was Roger? No, he was on What's Happening. Remember Roger? He was on What's Happening. JJ's on Good Times. He's doing Medicare Part C, Medicare Advantage commercials. Why anyone would buy a policy with a JJ? Is JJ? Yeah, Good Time. Dynamite. It's weird to me, but hey, whatever. Yeah, absolutely good times. I don't know. I mean, should you stick to your 401k target year index? Yeah, I mean, I got no comment on that because that'd be me giving you investment advice. I can't do that. Let me turn my fan on. Hold on just a second. Oy. Oh, look at baby cakes. Baby cakes. Oh, baby cakes. Oh, I love my babies. All right. No car rides. The hockey guy, right on, Patty. Yep. All right. Right on. There's Danny Maxwell. Never thought he could retire before 62. Now his wife are planning on retiring at 55. Freaking awesome. Hey, Blaine, Minnesota in the house. Right on. Carbon credits, another way to rob America. Yeah, 100%. Finding Dory. Yeah. All right. I greatly contribute to the lowering of greenhouse gases by more than any live by eating many, many cows. That's right. Oh, 100%. Eat cows, lower methane, 100%. Man, that's what I said. No more cars. Okay, I get no car rides. Right on. Because I was talking about right on. Any recommendation on planning software similar to what you use? I like. I used Kotlikoff, his Social Security. Maximize my Social Security. I think that's pretty good. Yeah, so I'm a fan of Kotlikoff's. I don't really know what's out there anymore. E-money was was what I used to use before I started using Right Capital. But I just don't know what's out there in terms of other software you can buy. But I like Kotlikov's Maximize My Social Security. That's pretty good. Yeah, I don't know. Good question. Hey, Kevin in Phoenix in the house. Morris Haddad says, "What do you think about?" Well, it's funny you say that, Morris. Morris asked me what I think about Fundrise, and I've been having this in my open tabs for about 3 weeks now because I want to do a video on it, and I just keep putting it off. Welcome to the future of real estate investing. We got a hipster guy there. All right, they look happy. Yes, all right, that's good. Family, some old people. All right, good. Yeah, so I'm Morris. I don't know enough to give an opinion. I'm hoping at some point to get one of these guys on my channel, because I just think it'd be interesting. But I don't know enough. I'm going to do a video on this at some point because I do find that interest. I find real estate to be to have value still, without question. Look, man, at the end of the day, you still have to have stocks, everybody. I mean, you have to. And remember, don't look at it as like the stock market. It's not a stock market. You are still using, like my daughter just flew to Paris today. She's only 20 years old, going there by herself. Nuts. And she works. It's insane. Look, they're not millennials. Whatever the generation underneath them. There is some talent coming up, man. I mean, look, at the end of the day, there is some talent coming up. I'm just telling you. She's going to Paris. I said, what? She wants to take a language course. She has a Georgia Tech course she can take. And I said, you're going to go there by yourself? She goes, yeah. And she went to an interview at Oxford when she was 17. I said, where did you get? She got cojones I don't have. She didn't get that from me. I said, oh, okay, just watch out for the riots and everything because they're rioting because they're stupid vax passport stuff. But she's nervous, but being a little bit nervous is a good thing. So I can't remember why I said that. But anyway, I forgot what I was talking about that. No, so you need to, that's what I'm saying. So remember, the stock market is still the companies you use every day. So she's flying on Delta. Is Delta a bunch of ass clowns, the leadership? Yes, we know that. Don't expect luggage to arrive. The woke people are always going to go broke, ultimately. So I just use that for an example, but that's still a corporation you use every day. Costco, still a corporation that you use every day. Walmart, all these places. There's so many different places that you use on a regular basis that is not the stock market, it's actually what you use. You're spending money there. They're employing people, they're making profits. And as such, they're not ever, anything could happen. But the idea that they'll go broke is silly. It's just silly. Now, that doesn't mean it can't drop in significant value in terms of its stock price, but the company itself is still legitimate, man. There's no other way around it. And as much as Jeff Bezos, the Cuban Bezos, who doesn't help his Cuban brothers down there, who are being abused and murdered by the commie regime, who should be, let's just put it this way, I shouldn't say anything else. But anyway, prayers to the Cuban people, prayers to the Haitian people too, by the way. The president of Haiti was assassinated. Turns out there was some Americans involved in that with some connections to our inglorious government entities. Turns out the Gretchen Whitmer thing had some glorious government entities heavily involved in that. Turns out the 1-6 thing had some glorious government entities involved in that. And on a side note, you hear about these, when they catch these Muslim terrorists, right? On occasion, the FBI does. You recognize the FBI has set a lot of these guys up. I hope you know that. It's amazing when you start reading into this. You're like, why did the FBI, what the hell? Like it's entrapment without question. Now, will the FBI ever be held accountable? No, because it's always easier to plead guilty when the government's like Mike Flynn. If Mike Flynn couldn't get if he had to plead because he knew the government entity, no one can stay safe. But all these guys, these Muslims, I'd be like, oh my God, they're terrorists everywhere. It's like, no, they were not. They might be kind of rabble rousers, but they weren't committing any activities until someone got in their head. A lot of times, it turns out to be FBI people. It's crazy. What the hell's our government doing? And it just took for Trump to be abused by the FBI before I realized it. Actually, I saw it with Comey. I said, why aren't they going after Hillary Clinton's emails more? That was a little bit weird. And I talked about his last live stream. The whole thing with Ruby Ridge and Waco really started me off. It's like, yeah, this ain't cool, man. But at the end of the day, I'm like, wait. So we got Ruby Ridge, Waco, on top of all the mass surveillance of MLK and all that stuff. And, that's way before my time. And all of a sudden, we think that the FBI was up to just peaches and cream, chasing Muslim terrorists around the country. And then we find out that there's some bad stuff going on, man. Some bad stuff. The point being is that what's going on in Haiti, that's kind of creepy. And then you find out the DEA or the CIA's got some kind of tentacles involved in there. You're like, what's happening here? It's nuts. But even with all that shenanigans, we're still going to go to Costco. We're still going to go to Publix. We're still going to go to these stores, and we're still going to shop there and buy goods. And as such, these companies are still valid, and they can still grow and make you money. Just so you got to stay in stocks. So a lot of people I follow are like, it's all in real estate and Bitcoin. I find that to be silly, man. It's not all in anything. It's always in diversification. All right, let's see. Just turned 51 years old this week. So I'm an old man compared to you because I turned 51 years old those weeks ago. Yes, do Roth conversions when you retire. Just take money out and you'll be taxed at the lowest rate. I'm not sure what that's a relation to. What's the best red state in southeastern portion of the U.S.? It's got to be Tennessee. Tennessee Tennessee's got it. Other than not having any beaches, it's awesome. Yeah, Tennessee's fantastic. No other way around that. I like Alabama, absolutely. Alabama is it's not Tennessee. Alabama's got Huntsville in the north, the lakes, and the some mountains, not Smoky Mountains, but some mountains. And then it's got Orange Beach down. Alabama's fantastic. And the overall cost is probably similar to Tennessee. A lot of people don't recognize that, but Alabama is probably the same. Georgia's nice. It's just, I live in Fulton County. Don't move here. I'm just telling you right now. Don't move to Fulton County. So the corridor for me is that whole Chattanooga, Blue Ridge, Georgia area, Huntsville, and over to Greenville, South Carolina. But South Carolina doesn't do much for me. It's a beautiful. Greenville, South Carolina is fantastic. Northwestern South Carolina is friggin' insanely gorgeous. But I would prefer Tennessee compared to South Carolina. So of those, if I had my choice of one state, it's Tennessee, man, without question. Now, I still like Western Virginia, and I would not overlook West Virginia. They got a clown for a governor up there now, but he's dumb as rocks, and he'll be gone at some point. But West Virginia, I'm telling you, man, if I could convince my better half, I'd be moving to West Virginia too. But she's from Virginia, and her hoity-toity self looks down on those folks in West Virginia. It's kind of like how Massachusetts looks down at us folks from the great state of Maine. That's what we call massholes. What's the best state for a retired military guy with government service? What's the best age to retire? Well, I don't know what the best age to retire, but man, best state if you got Illinois. But actually, from a tax perspective, Illinois is pretty good. Stay the hell out of there, though. It's the Southeast, man. Nevada is pretty good too. I'm not gonna lie, Nevada, South Dakota is good. But I'm telling you, man, you got to watch the property taxes, and that's where Tennessee, Alabama, most of Georgia, not Fulton County, the property, Louisiana. I don't know why people like Louisiana. I love my Louisiana friends. Louisiana, I will never live there. Every single time I step foot in Louisiana, it's rained on me every single time. And I don't mind a little bit of rain, but man, that's what I'm saying. Stay away from Louisiana, Josh. So I will never live in Louisiana. East Texas, Tyler, Texas. But again, the property taxes in Texas are high. But you got to live in a place that's free. And what I mean by that, they don't mandate vaxes. They don't mandate masks. They don't mandate you can't have a wood burning stove. It's just a lot of this stuff that, these northern states are doing, they don't do down here. You know what I'm saying? Now in Fulton County, we still have a stupid emissions thing that you got to get every year, every 2 years. It's a big scam. Everybody knows it's a scam, but be it as it may, it is what it is. But the property taxes are low. The income taxes are quite low. In Georgia, they're pretty high for making decent money. But once there's just lots of wonderful places in the Southeast. And I just tell you, man, the drawback about the Southeast, Frank, is the humid. It's painfully hot in the summer when it's humid. Now, there's something you can do about that. It's called air conditioning, but or you could do you could go 3 years out of this is what I plan on doing. 2 months out of the year, 3 months out of the year, going back to my native state of Maine. I'll keep my residence in Georgia or Tennessee and or Virginia. I do Western Virginia, that Lexington, Botetourt County, Raffine, just a whole is freaking awesome. I mean, it's like Western Virginia, Eastern Tennessee, West Virginia, that area right there for me, man. It's just it's heaven, man. I'm telling you, I did a video the other day. I'm gonna share with you guys this. This is insane. I'm gonna show you guys something. Monterey. So check this out. Go to. Oh my goodness. You want to see? Oops, I went to the wrong place. Go to share. Go to Chrome tab. This is Monterey, Virginia. Oh my goodness. This place is just, they call it Little Switzerland. The town, Highland County, not Bath County, Highland County, Virginia. It's you got a big civil war there, a fight there. Mountain of the King is Monterey is a Spanish word for Mountain of the King. I did not know that. Now this is a small place. It doesn't have very many people, but there's people around here. I mean, not a huge. So here it is. That's Highland County right there, dude. I used to live in Rockingham County, which is right there, I think. Right here, and I'd do seminars up here and into West Virginia, Franklin, West Virginia, Bath, Sugar Grove, West Virginia, Augusta County, and I forgot what Newmarket. I forgot what county that is. But anyway, I do like right in here. You'd see some of the most beautiful parts of the world you'll ever see in your life. It's just freaking fantastic. It's awesome, man. I love it up there. I had a couple clients up there. It's good night. Monterey, Virginia. Now, that's my wife will never move there. It's too small. It is. I mean, it doesn't have many people, probably 300 people. But you come down the mountain into Harrisonburg, or you come down the mountain into Newmarket, Virginia, it takes, an hour down the mountain. Now, the problem is mountain is 33, Route 33. When it gets snowy and icy, which it does, it's not that easy to come down the mountain, if that makes sense. But it's so flipping gorgeous up there. My son will be getting a benefit off his Social Security. How can some of that be invested for his future? I mean, I don't know. I don't know. I don't know how it can be invested. I mean, if you're trying to invest for the long term, VTI or bust. But I just can't give specific investment advice. I just know if you're a long-term investor, as I still am, I'm still, pretty heavy in the stocks. I mean, 90% of my portfolio and 90% is still in the stock market. I'm 51 years old. And I took some gains off the table, paid down some mortgage, and I bought some tips, but I'm still heavy into the markets. VTV, the Vanguard Value Index Fund, is still by far and away my biggest holding. Federal employee, have 7 years to meet mandatory retirement age at 57. So you must be a FBI guy or something like that, a marshal. Canyon Lake, Texas, right on, man. We've been there a couple of times. I have a taxable account that's 45 cash, building a house on Canyon Lake, Texas. Pay off early. Do you have the cash in which to pay it off early? You got Roth, 500,000 Roth. I don't know. I mean, I don't know if you have the cash to pay off early. So the answer to that question is I don't know. I would try not to have the debt. I mean, you have a pension. You'll get what 5 years of supplement as well until you're 62. You know, you got federal employee health benefits. Your out-of-pocket cash flow is not going to be huge. You carry the debt, but you know, at the end of the day, not having debt is always better. So I would pay it off early, but I'd be hesitant to just take money out of TSP to do that. So I probably need to know more. 100% index equities until you hit your number. Your stable crappy old job is your bonds. Okay, I got you. $1 million isn't much nowadays. All right, well, if $1 million isn't much, then what I got is a whole lot less than much. That's for sure. Do I have a brother named Andy M? No, I do not. It's not. I tell you, is there legislation? Point to me the legislation with a step-up basis is being debated. I'd love to see that. I just tell you, man, they're not getting rid of step-up basis. It's not happening. I'll be happy to say I'm wrong if that were to happen. There's no way the home builders, the realtors, the bankers, no one is. The lobbying groups are not going to ask to get rid of step-up basis. They're going to absolutely go against that, and as rightly should, because it's been part of the tax code for freaking years, man. So show me the legislation that's being debated. I'd love to see it. I don't know. I know Biden said he's thinking about it. Okay, that just because Biden says something and maybe stupid AOC says something doesn't mean there's legislation pending. I mean, I might be wrong. Show it to me. Jill says she should do Roth conversions on the stock portion of 403B. Yeah, I mean, I know your situation, Jill. Yeah, why not? I mean, I got no qualm with that. Sure, I got no qualm with it at all. If the market's too high to do Roth conversions, I don't know. No one knows. I mean, I did a video on this a couple months ago, and I said I'd probably wait because the markets are high. And then my man Sergio pointed out, I said, yeah, it's good, solid counter to my argument. So I think at the end of the day, yeah, why not? You are never going to be in a lower tax bracket, so might as well take advantage of some of that for sure. Yeah, exactly. I know. I love when guys say $1 million isn't much, and I say 10,000 isn't much anymore. And people say, I wish I had 10,000. Exactly. It's all dependent on point of view, brother man. All right. So Ross is answering Kevin's question. It depends on what other income the person has. Actually, in terms of can he retire? Well, no, it's not the income he has. That's not. I don't think Kevin put this in. The income isn't what we're concerned with first and foremost. So I'll let you guys figure out what we're concerned with first and foremost. Right on, Bruce. Rob's in the house. Most of those people don't watch financial planning videos. You don't know that. I mean, maybe. We don't know who does. I had a guy saying something on one of my channels. He goes, most people do this or that. I said, how do you know? Have you interviewed those people? We don't know what most people do. I don't know. But vinyl, by all means, $1 million ain't worth much. Hand it over to your buddy Josh. Cash is trash. Give me your trash, people. I'm going to hypnotize you. Give me your cash. Give me your cash. Kevin says, rolled an old 401k to Vanguard 2030 about 6 months ago. I want to start contributing, but advised to start a new 2030 fund instead. Why? Why would they? I don't get that. Why not just contribute the one you have? That doesn't make any sense. I don't understand that, Kevin. That doesn't make any sense to me. Why would they tell you to do a brand spanking new one? Unless they're getting credit for their tickies. So at USA, we used to get this. You'd have, oh my goodness. You'd have people with 6 or 7 different funds because they got a check mark for every fund they had. The advisor. So one fund, you only got 1 point. 6 funds, you got 6 points. You see any incentive there? And you had to have a certain amount of points over the course of the year in order to get your bonus. You see any incentives there? So I always say, why do people always have all these different accounts, all these different funds? When I first got there, then I said, oh, that's in financial planning. We got graded differently. Later on, we got graded in a similar way, but it's like, this is freaking stupid, man. So you have all these, accounts, and it's just the whole thing was stupid. And It was nuts. And so that could be the only thing I could see my man Kevin is dealing with. That right on. Oh, Rob, is that you? Did you change your avatar? Did you change from yeah, you changed from whatever that guy's name, that guy, to Puppy Dog. I'm not only watching, I'm doing the thing now. Got 1 million. I think they're going to stay low, Scott. Man, I tell you, I mean, looking at the 30-year Treasury, I can't just look. Oh, such a baby cakes. Oops, love the baby cakes. Oh, baby cakes. Oh, I love them. All right, so let's see what the 30-year Treasury is doing. All right. 30-year is at 1.93. Look, I got an adjustable rate mortgage. I'll tell you that right now. It's at what, 3 1/4, and I had thanks $5. Even Josh, my hypnotism worked. Send me more money. Send me more money. I need $999,995, and I'll be there. Thanks, Harry. Much obliged. Anyway, so what was I? Oh, so I got the 3 1/4 is my adjustable rate mortgage, and I'm not refinancing or anything because the cost of refinance is such a freaking pain in the butt. I hate it. But I had a 7-year arm, and I'm fine with that. Absolutely. So anyway, at the end of the day, I don't think rates are going higher anytime soon. I just don't. But certainly could be wrong. What do I believe in? BT. What the hell is BT? I don't even know what BT is. I'm not sure what BT is, so I'm not sure. Couple days you did a video against Roth conversion. You showed a 1040. Oh, all right. Well, think about it. If you have two people, and I can't remember the exact, but all right. So 2035. All right. So you got, folks, think about this. If a guy is making the maximum of his PIA is 32, I'm telling you, this is such a critical thing that people underuse when it comes to the huge benefits of their Social Security statement. And Social Security does this. I know Devin did a video the other day where they're changing their statement. It's still not good relative to where it should be. And I get it. They don't really know what to project. But think about it. My man was getting 3,200 is the max you can get on Social Security for a PIA. All right, 3,200. We times that by 24%. All right, so we got 3,200 times by 3,200 by 1.24. That's 3,968. He's going to get when he's 70 with his delayed earnings credits. 3,968. That's 48,000 a year right there. Assuming his wife gets 15, she'll get $1,600. All right, so between him and his wife, because she'll get half of his PIA, they're going to get $1,600, 4,000 plus 1,600. They're going to get $5,600 a month in Social Security. Times that by 12, that's $67,000. $67,000 with a 2% cost of living adjustment. So we take our trusty calculator, we hit future value or present value, $67,000, 2% cost of living adjustment, 14 years, compute future value. I mean, at 2%. So you can see how that works. You're saying at the end of the, oops, hold on a second. I screwed that up. I want one. There we go. One. There we go. So now I got to go back. Now I'm screwing this whole thing up. Anyway, so he's going to get $60,000 a year right out the gate at 2% cost of living adjustment for Social Security from now until 2035. That's how he gets his $85,000 a year. Now, Social Security statements don't say that. They say your benefit is in today's numbers. They don't say inflated numbers. And the reason they don't, because no one really knows. No one knows. Rob, more money to the million, right? Hey. No one knows what the inflation rate is going to be. Social Security trustees had a 2.6 a couple years ago, dropped it to 2.4 last year. I haven't seen the new trustees report come out yet. So it might be. I just haven't seen it. So I'm using a 2% cost of living adjustment for Social Security. And I love all these people, the same people. Oh, I haven't got 2% over the last 10 years, but inflation is going to kill us. It's like, dude, you're talking about both. I'm not saying this guy is. You're talking about both sides of your mouth. You're saying I haven't got 2% of the last 10 years, so you're overestimating Social Security cost of living. But I'm worried about inflation. Like that, mutually exclusive. So I just use a 2% because I don't worry about inflation. I worry more about deflation. That's how you got it, man. Stop looking at your statement today and say, "Oh, I'm only going to get $1,900." That's $1,900 today. Today. If you're 50, so right now I'm 51 years old. My last statement said I'm going to get $2,900 a month or so. I can't remember. I'm not getting $2,900 a month when I'm 67. I'm going to get $2,900 a month with average wage index from now until I'm 60, which has historically been higher than the cost of living adjustment. And then when I'm 60 to I'm 67, I'm going to get the cost of living adjustment. Again, I use the 2%. And so whatever the 2,900 is with AWIs and with freaking cost of living adjustments, it's going to be a hell of a lot more than 2,900. So if you're saying the Social Security is a bad deal, man, I'm only getting 2,900 a month, and I tell you my investments, man, I'm going to get 5,000 a month on my investments. Yeah, because you're inflating your investments. You're not inflating cost of living on Social Security. And everybody does this. Everyone screws this up. I used to do that. And then I found out that I was wrong. All right. Yeah, well, I agree with that. Dude, what I'm satisfied with, if I had $1 million in a taxable account and my house paid off, I'm satisfied. I could live off that. Because I know my Social Security, like I just said, between my better half and me, we're probably looking at $4,500 a month in today's numbers. I mean, that's $54,000 a year. No debt, $1 million in savings. Take 5% a year off that every year. That's $50,000. That's $100,000 a year with no debt. Hell's bells. Well, I mean, what else do you need? I mean, rent a freaking place up in Maine for a couple months out of the year, and it might cost $10,000. Come back to my freaking house of squalor, in eastern Tennessee or western Virginia or northern Georgia. It's all good, man. It's all good. But inflation and healthcare has already been inflated. We know right now I'm using basically $10,000, about $10,000 a year for Medicare, $5,000 for each person, $5,000 for me, $5,000 for my better half, inflating that at 5.5%. So if I got $100,000 of income coming in, tax-free. Shh. You know why it's tax-free? Because that $100,000, that $1 million will be paying out a little bit of long-term capital gains, a little bit of income, and the rest will be return of principal. A little bit of long-term capital gains, a little bit of dividend income, qualified dividend income. My Social Security will be tax-free. $100,000 in tax-free. $10,000 that goes to Medicare. If I need to get a reverse mortgage, I will. What more do you need, man? So for me, I want $1 million. Taxable account. Taxes already been paid. It's all tax-free. Shh, don't tell anybody. If too many people do this, they're going to ruin it for us, just like they did with this file and suspend on Social Security. When word got around on file suspend, they nipped down the bud. We don't want them to know about our strategy to have $1 million in Wellington. Right? Shh. House paid, $50,000 a year in Social Security. Shh. It's $100,000 of income tax-free, with inflation adjustments as well, because Social Security has a cost of living adjustment, and your Wellington fund has bonds and it's got stocks in there too. Shh. Please. What the hell? Dora, you leaving us? Wrong answer. Let's see here. Yeah, I tell you, no. What? And that's the thing, Rob. Most people don't spend that much. I'm just telling you. I was talking to these guys today, and I said, let's just put it this way. Look, are they atypical for the current American consumer? Probably. Are they typical for the history of mankind? Yes. They just don't spend that much. They drove a 2014 Honda Civic or something like that, a 2007 VW of some sort. I can't remember. I'm just like, man, they're gonna have to buy a couple cars over the next couple of years, the next 10 years to replace these vehicles. They got a house that's paid for. They got another. I mean, and they saved. They put 4 kids through college. They just don't spend that much. Most people just don't spend as much as we think they do. They just don't. And then, of course, as you age, you spend less. And I'm just like sitting there thinking, and they were worried. I'm sitting there thinking they were worried they're going to run out of money. I said, you're not running out of money. It ain't going to happen. I'm more worried about estate tax because they live in a state that has a estate tax, which will go unnamed, but they're not running out of money. I says, you need to probably start lighting cigars with $100 bills, man. If you don't, Obama's going to get it. Thanks, Obama. Told you so. Not sure what you told me. There is no alternative. Tina, right on. I did have to pay $6,000 AMT. Wow. So, because you live in Connecticut, man. There you go. My man Vinyl, he has a lot of money put aside, and he lives in Connecticut. So I had to pay $8,000 AMT the last year until Trump nixed that. So Trump got rid of they did get rid of AMT, alternative minimum tax, by the way. All right. Any thoughts on individuals? My man Northern Captain, I think from Maine. Yes, we did recently retire. I'm not a fan of QLACs, man. I'm not. I did a video on that a couple years ago. I probably need to do a new one on that. The rules at that time, and I don't think they've changed, were that you could only do 33%. You still had to do RMDs on the remainder, which is like 2/3, I think, Northern Captain. And you can only do 33% of a. I don't even think it was an IRA. I think it had to be like a 401k. You see the video I did. Let me just see if I can't find that actually. Let's go to. This is a while ago. I'll do another one on that because I'm on the wrong channel. One sec. That was a good video because I was getting that question a lot, and I just don't think they're all that in a bag of chips. So let's just put it that way. If the point is to avoid RMD, then a QLAC didn't do that. The QLAC, you still had to take RMD on the remaining amount that you had in there. So let's see what we got here. QLAC. Yes, right here. Okay, so this is from November 20th. Let me show you. Let's see. Hold on a second. Slowpoke Rodriguez. Slowpoke Rodriguez. You guys know who Slowpoke is, right? So here comes my QLAC video. All right, share. All right. I'll put the link in the show notes if y'all want to click on this.
My friend's going up a hill here, so pardon me if I'm out of breath.
Let me pause this real quick. There we go.
Listen to my man Michael Finke.
How goes not pausing? There we go. I only got 678 views on that. Yikes. All right, so I'll share that. Here we go. I think that's before. Was that before Pablo? No, that was. I think that's after we had got Pablo. Yeah. So we got Pablo in October of 2019. I think so. All right. So there's that video for the QLACs. I'll probably do another one just because, is it not? Come on, man. All right. Brenda, retiring in 2022. I have $700,000 in Fidelity Target Date Fund. Should I leave this fund after retirement? I mean, let's cross that bridge when you retire, Brenda. I mean, right now be silly to say, should you do anything right now? Let's see how things shake out before you retire for sure. I got no qualm with it right now. I'll tell you that right now. It's kind of like this. It's almost like their Wellesley income fund. I just think the one thing we got to avoid is getting smoked on the downside right when you step into retirement. So, I like Wellesley. I like Wellington. I don't think I've ever hidden my my preference for those two funds, but why come back in 2022 if that makes sense. Ken Martin. Tyre. Okay. All right. Jill says she's glad she walked away and hung up in 2019. No debt and a pension. Don't spend much. Much happier and healthier. And Jill's got a good friend next to her that's a gardener, and I keep forgetting her channel. So, Jill, if you want to post her channel in, and I forgot her name off the top of my head, but she's a wonderful lady, which I interviewed one time. Vinyl was fired by an automated computer system. Does Fidelity have a fund equivalent to Wellington? Yeah, the Fidelity Balance Fund. Great fund. Great fund. 100% good fund, without question. Yes, sir. Jeff, okay, right on. Ken, all right, retiring next week. We'll get pension, have small 401k. Taxes are worrying me. What can I do? Well, if you have a small 401k, there's no reason to do much. I mean, you're going to have to pay taxes on your pension, and that will probably make your Social Security tax. But if you only have a small 401k, nothing you can do. If you got the income, you got to pay tax on it. That's all there is to it, man. I think the Puritan Fund is all stocks, though, if memory serves. Yes, Mayor gets 100%. Let's see. All right, good. So lots of comments on here. Appreciate it. I'm in the IT and healthcare is very dysfunctional. Worked my last 10 years in IT healthcare. Prior to that, financial IT industry. Oof. Yeah. That and Vinyl did. Oh, that makes my head hurt just looking at it. It's dysfunctional everywhere, 100%. Everyone eventually gets burned out for the pace and BS. IT. I think a lot of things are dysfunctional all across the board. A lot of these things are being shipped to India. Computers, client customer service stuff being shipped to India. A lot of IT stuff being shipped. A lot of other kind of preparation, tax planning being shipped, financial planning being shipped to India. You might not know that, but trust me, it is crazy. There's Daryl Q. Oh, Daryl Q. Do. Yes, he says, do people have a hard time switching off the accumulating phase and turning on the spending? 100%, Daryl. It's tough. I mean, I give myself as an example is that I was doing I was saving money in my 401k like a crazy man. It was freaking awesome, man. It was awesome. And I said, man, it was just awesome. And then I quit my crappy old job. Not only did I stop saving, but I started pulling. And then you see it building and building and building. That's tough, especially because there's no income coming in either. And it's not just, this is where I think financial planners miss it. It's not just that you got to draw down your portfolio, but you're drawing it down in which there's a two whammy. You have no income coming in. There's nothing coming in. So the only income is from this thing right here, which is now going to be reduced by the amount you draw it down. And then on top of that, when the markets fall, which they certainly will, I'm going to share with you guys this. A guy sent this to me I was meaning to do a video on this today. I had to take my daughter to the airport, and basically going through Atlanta, you might as well just jump off a bridge and kill yourself, because it doesn't matter what time of the day. It doesn't matter. If you go through Atlanta, I could literally go on freaking, the night of the zombie attacks, and there'll still be traffic on the road. It's insane because Atlanta traffic sucks. All there is to it, which is why I got to get the hell out of Fulton County and get up there where there's not so much traffic. All right, so I can't find this. Oh my goodness! I mean, take the airport bumper to once we got 400 onto 75, bumper to bumper the whole way. Crazy. They can all kiss my butt, man. All right. Let's see. Who's my man who sent me this question? My nose itches. I think it was down here, actually. Hold on just a second. I guess I'm not going to find it. Anyway, this guy has sent me a question. Yeah, I'm not going to find it. He has sent me a question, but basically saying at the end of March of last year that he was thinking about getting out. Should he get out? And I'd love to read it directly, because it just shows you the level of, it's easy when the markets are up, but when the markets are down, it's scary. when the markets are down, it's scary when you're pulling money out in which to live on. I'm just telling you right now. So going from the accumulating phase, accumulation is easy because you see this money growing and growing and growing. The decumulation phase is tough because you're pulling it out and you don't have any income coming. I'm telling you, it's a big flipping deal. This is why people don't spend as much. And it's not because they're poor. It's because they're more conscious of their dollar. I'm just telling you, they don't go out to eat as much because they say, I can make that at home. I don't want to tap it in my portfolio to put, buy a piece of chicken from Chick-fil-A. But when they're working, they do because they got the money coming in. The money will roll right in. What do you say? I would like to have a car. I would give you some if you only would have treated me nice. Yeah, you wish that you did. You'll feel pretty stupid, and I'll just sit and grin. The money will roll right in. Anyone know that song? All right. Yeah, always bypass the land. You can't bypass the land to go to the freaking airport, though. That's a thing. It's the zombie attacks. That's pretty funny. Did I miss a bunch of? Hold on a second. I think I missed a bunch of stuff. Hey, Robert P. watching for over 4 years. That's nuts, man. Hey, that's 4 freaking years doing this. Crazy. How much weight have I put on, Robert P? How older do I look? If I retire at 58 and only have rental income, otherwise use save cash, does rental income count? Oh, yeah, absolutely, T-Body 43. If it's on your modified adjusted gross income, amigo, it counts against Obamacare. Scott said, I moved all my taxable account to cash this week. We may need to buy some land later this year next and don't want to lose any value. I tell you, man, I did 100%, 100%. 100%, 100,000 in cash, but it won't last long with inflation. We'll see. We'll see, Robert. I would say you'll be wrong and I'll be right, but you might be right. I might be wrong. I don't think so, but we shall see. We shall see. Wow, people get. I don't want my lawyer, doctor, accountant express their political views to me. Okay, what's going on with Elizabeth here? She didn't like my my politics. All right, let's. But Josh, won't you be able to fly first class and take 30-day cruises around the world? Man, I literally have no desire to take 30-day cruises around the world. I don't want to pollute more CO2 in the atmosphere, Daryl. I don't want to do that because CO2, while it's a nutrient and makes the world greener, I don't like it because it's a greenhouse gas and it's going to bring to global warming, which will create a longer growing season and more moisture in the atmosphere, which is more water for the green to absorb on top of the more nutrients. And we can grow more food to feed more people. Yeah, all that stuff is bad because too many people. So my man I was talking to today in Tejas, he has a private plan through United Health Group, not through the exchange. He's not 65. It covers dental as well, and he's paying less than he did on Obamacare, just FYI. So if you're in Tejas, I don't know, but I did not know this. I did not know this. So if you're in any state, well, in Texas, I should say, but I don't know about other states, but he's got a United Health Group private plan for he and his better half, covers dental, and it is more or cheaper than the Obamacare was. Think about that. Always depends on your expenses, man. Hey, Scott did a lobster boat trip yesterday out of Belfast, Maine. Oh, man. Maine's such a good place. Problem of being in Maine, man, is that I worry about the Portland's ERS taking over, making the whole state blue. Now it's just like Maine. It's just like Northern Virginia. Just like hell, Atlanta, Fulton County. A lot of these cities dominate the whole state politics, and the other outside of Portland, Maine is pretty blue, pretty red. I'm just telling you, man, it's a bunch of northern rednecks, which is awesome. But Portlanders and more coming in every day from Boston, they can all kiss my butt. they're going to turn that place blue at the whole state. You know, my man, Razorholic, Razor Fist, a Rageaholic, he said this is a great suggestion. We should have electoral votes in the states as well, if that makes sense. So basically, you know, the U.S. has electoral college, right? We should do that in the states as well. So Fulton County is a prominent county in Georgia. That might go for Biden. It will just say 63-37. So Biden gets how many Fulton County electoral votes? But to be offset by Forsyth, be offset by Cherokee, be offset by other counties around, you know, they may only get 10 each, whatever it is. But watch my man Razor Fist, Rageaholic. I tell you, I've been in politics my whole life because I was born by far lefty family. My parents were far lefties. I said this a million times. Gus Hall and Davis, Angela Davis, freaking pins and bumper stickers. And if you don't know who Gus Hall and Angela Davis are, and you are on the left, you are not on the left. I'm just telling you right now. You're a faker. Anyway, point being, I've been very active and engaged in politics my whole life. I listened to this young man, you know, young given me, I'm 51, him and Six Hexhammer, another younger guy. And I said, man, their range of political knowledge, Razor Fist is even more so than Sticks, in my opinion. I love them both. But I was like, that guy, he's insane, his knowledge. And frankly, if it weren't for YouTube, he would still be digging ditches or whatever the hell he did. I don't know what he did. You know what I'm saying? And I find it, there is some amazing political minds out there on YouTube that before YouTube came around would never got the benefit of the doubt, never got the time. No one would ever listen to them because they didn't follow the mode of the Republican Party, the Democratic Party. And I find it freaking awesome. I do. And I'm listening to this guy and his structure on presenting the case for electoral college in the states, each state. I said, man, thank God we don't have to rely on Mittens and John McCain's of the world. Thank God that's a Turtle Boy, my man Turtle Boy up there in Massachusetts just took out the clown Massachusetts second in command because he is a freaking perv. It's sick, this guy. And the fact that he was a second in command of the Massachusetts GOP is freaking scary. But Turtle Boy took him out because the guy was a scumbag and he left his trail of crumbs all led back to his pants. Let's put it that way. Anyway, there's so many people out there that are doing great, great work that never would have got the time of day if it weren't for YouTube. So as much as YouTube can drive us crazy, man, I tell you, anyway. So I'm listening to my man Rageaholic, Razor Fist, Rageaholic, and I just like, damn, that's a great idea. Have electoral college per state. I think it's great. All right, Robert's retiring next year. 1.5, house paid, married 40 years is enough. Well, how much you gonna spend, man? I mean, if you're spending $300,000 a year, it won't be. If you're spending $50,000 a year, you'll be just fine. $1 million and no debt, right on, man. Carmen Manzella. Okay, let's see. Well, don't subscribe. Okay. Elizabeth, so it keeps her from subscribing. Subscribing is just a push of a button. It's not like you're doing anything. My God, I don't care, Elizabeth. How do these lefties not realize what I'm doing? So the people I was talking to today, they hired me because of my political stance. It's same group preference, man. I'm appealing to people who think like me because there's very, very few people who say it outright for the general public to observe. And the people like you, Elizabeth, you're never going to hire me. I don't care. I don't. I literally could care less. But you're not going to hire me because you're offended by me. That's fine. That's your choice. I literally could care less. However, these people over here say, finally, someone's got the guts to speak our truth. I want to hire that guy. Do you not? It's the weirdest thing. You're turning off 50% of your fan base. Dude, I'll turn off 90% of my fan base. I don't need a huge fan base. I don't. Because what I'm trying to do is help fellow travelers who see things the way I see things. And I'm going to tell them this is the way I see things. If that bothers you, don't hire me. I don't want to work for a leftist anyway. I'm not going to sell my soul to work for some commie. Crazy? I'm not even saying you are. I don't care. It's fine. Do what you got to do. I unsubscribed to a couple of people who turn out to be big lefties. It's sad. I like their channel, but I don't want to hear woke crap. You know, we hear that everywhere. We know what we don't hear everywhere. We don't hear right-wing populism everywhere. We just don't. The woke controls everything. Everything. Corporations. In fact, it's funny. One of these days I'll probably post, but there's a BLM march, and it had in the BLM flag, it said, "We accept Visa and MasterCard," and another flag. And I think Visa even sponsored it or something like that. I was like, yes, we're so oppressed. We're so oppressed. Oh my goodness. You guys are clowns. Everybody knows who wears the freaking shoes in this place, who won't ever have to freaking be left barefooted. And it's not the people on my side. Everybody knows that. But Josh, don't you see your white privilege? You're not going to be looked at negatively in a store. Oh, okay. Wow. I'm shopping. People aren't going to look at me because I'm a 51-year-old white guy. They're not going to look at me like I'm thieving. Oh, my goodness. That's my white privilege. Wow. Okay. I'll take that any day of the week. Crazy. It's not negative. It's actually positive. My political commentary is positive because I love the country as it's founded, and the country is worth protecting and defending. But people got to recognize you got to do that first and foremost by finding people you agree with and joining kind of like-minded communities without question. Doing business with same groups, same group preference, not skin color. That's stupid. Same group preference as people, probably religion for sure, but people see the world you do. And I was telling my daughter when I was taking her down to the airport today, I said, look, so think about it. For every 3 liberals I offend, let's just say, and I don't think it's that, I think it's probably the other way, but for every 3 liberals I offend who scurry for the caves from which they crawled out of, there's one guy who says, I like that guy. That's all you need. And in fact, because the country is more conservative than liberals, probably for every 1 liberal I offend, I probably gain 1.5 subscribers. I'm willing to take that risk. And you're welcome to go someplace else. And I learned a lot. I forgot the guy's name. But he was in Iraq. He did a lot of history blogs. And then he started going woke. And I said, I can't take it. And I was able to kind of put 2 and 2 together. I think he was kind of a rich kid. He served in Iraq. And more power to him. But he was kind of, I don't know. Some people use that I served as a way to say, you can't touch me because I served. And I literally could care less. But I'm still, I respect people who serve, but just because you served, I'm like, oh wow, bow before someone who is as a DD 214. I don't care. But his woke stuff was getting on my nerves. Then I realized I think his dad was like a high commanding, a flag officer in the Navy. I said, aha, now I'm starting to put 2 and 2 together. It's just kind of funny. But he had a good a good channel. I just can't remember his name. I think he lived in Hawaii, but he had a good channel, and I enjoyed it until he started going woke. I said, there's way too much other content. I got so many subscribers. I can't keep up. It's nuts. It's nuts. Anyway, but don't jump on jump on Elizabeth like a trampoline. I mean, she's welcome to stay. Just be nice for sure. No, the government should not do that. Daryl says the government should invest their funds in the stock market. No. Whole life or buy term and invest the rest. All right. I'm assuming, Carmen, you're young. All right. So I am not against whole life. I want to make sure it's whole life. Oh, gotta drink an IPA. Oh man. Oh. Why are you saying that, man? Got to drink an IPA. Hey, Gary, if you sell your home to downsize, should you use the net proceeds to pay taxes for Roth conversions? Yeah. I can see doing that for sure. Should you, Gary? Maybe. But yeah, I can see actually that being an opportunity. Absolutely. Parents are getting $500K as an inheritance, no retirement savings. Can you recommend a fund for their taxable account? Look, I can't, but as I said a million times a Sunday, I like Wellesley and Wellington Fund. Look them up. Wellesley and Wellington Funds at Vanguard. I just like them. Doesn't mean your parents will. Doesn't mean they should invest in them. I have no idea what your circumstances are, but I like Wellesley and Wellington. That's if I had, I would look those up for sure. Yeah, Chuck says he projects about 85 in 2036 for his wife and him. Yep. Beer and dogs are God's way of telling him he loves us. Well, I gave up beer in May 25th, 1997. So dogs and my beautiful wife, Carl. Of course, my wife get on my nerves sometimes. She doesn't think I have any skills. So I was able to fix my daughter's car because she had the some mechanical issues on the not mechanical, electrical issues. And old Josh did it. I fixed it. It was actually quite easy because I watched some YouTube channels. My wife said to her friend, "Oh, Josh fixed the car." I said, I did it all by my lonesome. And sure enough, Chloe drove it. She goes, "Dad, you fixed the car." I said, "Take that, Charlotte." Not like this. I said, "Take that. Put down your peace pipe and smoke it." I did it. Now, the problem is when it comes to putting stuff together, my brain doesn't function like that. So I'm like, oh, for the love of God, I can't do this. Can you do it? So Charlotte's our carpenter. I just dig the ditches, man. If Daryl gave me $2 million to invest in your local real estate market, what would you buy and why? Man, I haven't thought about that, man. Always mess with Josh. Yeah, you do, Harry. You always mess with me. If I had $2 million to invest in real estate, I'd be buying a nice piece of land. And I mean, I think about this a lot. I would be buying. I just think you have to have a land where you can grow some food and maybe raise some chickens. I just think that's what you need for sure. You got to be out. You can't be in the inner areas. These places are falling apart. It's going to be 1970s redux here. It's coming if it's not already. And in 1970s redux, the country was still. We had Reagan, and Reagan swept in 1984, and then we had Giuliani when he beat David Dinkins in New York '93. I'm not sure we're ever going to get that again. I don't know. I'm pessimistic we will. So the 1970s redux is a different country than it was in 1980. And don't forget, Reagan did not win going away against Carter. I mean, until I looked at some of these things. I know everyone says he won 40 states or something like that. Yeah, but no one knew that going into the election. It was a close match, man. I mean, they only had a few polls back then. It was even Steven. I think, a couple times. Just look at some of the old polls. It's interesting. So even though Reagan won, it wasn't. He didn't. I mean, it was closer than a lot of people think. I'm just telling you. Anyway, so I don't know if we're ever going to get that again. I don't think we are. So what happens is the urban areas are going to collapse. There's no other way around that. It's going to collapse. And there's not going to be a Giuliani to come and rescue. There's just not. And as such, get the hell out of here. I mean, it's just, and I'm in a relatively urban area. It's the suburbs of Atlanta proper, but it's Fulton County. And it's they're already trying to succeed part of Atlanta because they're like, look, we're being taken over by criminals. And the Atlanta mayor isn't doing anything about it. She wants to defund the police. And then even when the police do their job, they're held accountable for doing their job. It's crazy. And because they don't want to offend Black Lives Matter. But Black Lives Matter is losing steam. No, it's not. Al Sharpton, Jesse Jackson's, the Ben Crumps of the world, they're always just $100,000 away of raising havoc. I mean, these guys we all know, man. We know what these guys are. They're clowns. They shake down people. They say, if you don't do what we say, we're going to get 10,000 people in front of your business and in your town, and we're going to protest you and scare you to death. And they do it. And then people say, here's $100,000, leave me alone. You got to get away from the inner cities because they're dying, and you don't want to go down with it. And so I would buy a piece of land that had a nice, I mean, I'm telling you, man, it doesn't have to be a farm, doesn't have to be a mini ranch, but where you can raise some of your own food. You put some solar panels on with a battery bank, for heaven's sake, not freaking grid tied. It can be grid tied, but you have to have a big battery bank for the love of all that is good. Just because you have solar panels doesn't mean you're off grid. And it's got to be in a place that's free. You got to be holding firearms, you know what I'm saying, without question. You got to be able to get to some water. Ideally, to have some kind of creek on there, a pond of some sort. And this waterfront would be good too, where you do some fishing, where you can just get some fish out there. I just think that's what I'm hoping to do in 5 to 10 years. It doesn't have to be $2 million, but we shall see. We'll see how the situation dictates. But things are going to get things. Look, man, when you're a Christian and you love Jesus, this is irrelevant anyway. And you know how the story is written, and we win. But there's going to be some pain, the feast and famine. I don't understand why people don't recognize feast and famine. The feast is followed by a famine. And we've had a feast of probably 40 years now. And the famine's coming. We've had small potato famines for a little bit, 2007, 8, and 9, 2001 and 2, this last year. But this last year was I think this was a strike that we'll never recoup from because the government took over without legislation. No laws were passed. And no one did a damn thing. Now, thankfully, finally, they revoked Half Whitmer's authority in Michigan. And I think they did it in PA 2, if memory serves. No laws were passed. It was all by dictate of the governor of various states. I think 50,000 votes separated, Andrew Gillum, that crackhead, from DeSantis. 50,000 votes. That's it. And the Florida, while the shining state it is now, it could have easily gone the other direction. Easily. So your entirety of your freedom in Georgia, 30,000 votes separated that freaking insane Stacey Abrams from Brian Kemp. I mean, so don't come down here and say Georgia and Florida are free. Well, we're free that we had governors in place that made us free, but it could have been a hell of a lot different, man. It could have been. And then you look at some Republican states, Ohio. I mean, what the hell is that? You know what I'm saying? And we're not that far removed. So I'm telling you, you got to be in a county that's red. You cannot be in a blue county. You can't. That's rule number one. And you got to be in a state that the likelihood of a Half Whitmer or a Stacey Abrams or of an Andrew Gillum is not that high. And I tell you, the southern states are the only ones that are, without question. Anyway, I would not. Would I be concerned with the home equity line of credit variable rate? Nope. Increase? No, I would not. So should I be concerned that I have a home equity line as a variable rate with an increase in the next couple of years? Absolutely not. Nope. How do I find a financial advisor that works by the hour? The Garrett Financial Planning Network. Garrett Financial Planning Network. What about an Index 5 Fidelity Index Fund 2035? I don't know what that is. I'm going to say Fidelity Retirement Fund 2035, S&P 500 in a small cap value. I don't get it. That's I got no qualm with that. Hey Josh, keep me on track for getting out of the crappy old job. Right on. Outgoing cash flow, expenses. Everyone gets it. Expenses. How about moving to a no income tax state and converting $2.5 million to a Roth and be done with taxes? Woo, that's a lot of tax you got to pay, man. But we haven't been up there. So my wife was out of town, and I haven't been up there. So we raised we're gonna give her $500. So from what you all contributed and what we'll give, we want to give her $500. My wife left a message for her and she never called her. And I'm sure let's just put it this way. When you've had a hard life, you don't trust many people, if that makes sense. So I'm just going to go up there and give her cash. That's what I'm going to do. I haven't been up there yet, but she had never called back. My wife went out of town. And so it's kind of out of sight, out of mind, but the next time we go up there, I'm going to find her. I'm going to give her cash. So I appreciate everyone who donated. La Jolla, California? No. You got to open up your horizon, Javier. Javier, I think, is in Texas. You got to open up your horizon, dude. I assume everyone in West Virginia lives off welfare. Well, it's a poor state. I mean, there's some truth to that. And I'm from Maine. Maine's similar to West Virginia in that regard. I tell you, dude, West Virginia is freaking insanely gorgeous. All right, let's see. All right, so we missed a bunch here. Sorry about that. All right, so my man asked for, I don't want to get the whole thing about whole life versus term. Just remember, whole life, universal life is not whole life. Whole life is not universal life. So when someone says whole life means that you make the premium they agree to. And as long as you're making that premium, the contract stays in force for your whole life. Universal life is not like that. Universal life can go down if the interest rates go down, if the costs go up. You could lose your universal life insurance if the experience of the insurance company is they're not making enough money. All right. So remember, universal life, you can make the set aside premium. That does not mean the life insurance will be there for your whole life. It just does not. Whole life, it literally is. If you make the set aside premium, they were contractually obligated that you will have that insurance for your whole life. That's just all there is to it. Universal life has a potential for more cash value accumulation because you have variable interest rates. Whole life does not. Whole life is very simple. It's like you will see this as a cash value after X amount of years. No ifs, ands, or buts. But universal life has a lot of ifs in there. And with low interest rates, it's hard for these insurance companies to make that work. It's just hard. And frankly, what a lot of people do is they'll underfund their UL universal life because this whole life is expensive. They'll underfund their universal life so that they can, under the premise that they'll put more into it later on. It never happens. And they should have just had a term, essentially. I don't want to talk too much of this. I like whole life if you're young and you got a lot of disposable cash flow. I think you can make a freaking good, solid investment. Yes, I did say investment. We're not getting stock-like returns, more along the lines of bonds. All right. I think you can make a good, solid investment in whole life if you're young and you have lots of cash flow you could dump in there. 100%. Will you get stock-like performance? No. Maybe. Because we don't know what the stocks are going to do. But we know for a fact what your whole life insurance cash value will be within a certain amount of time. We know that. And that's all tax-free. It accumulates tax-free. Death benefit goes to your heirs tax-free. And on top of that, you can, I'm hesitant against borrowing from it because I think that gets oversold. But there is some strategies you can do to borrow against your whole life tax-free. I would be hesitant to go down that road. So I think it's Carmen who asked the question. Whole life insurance can be a wonderful tool. A lot of times it's just not used appropriately. And the reason is because the life insurance salesmen are just trying to sell it to you. And they're trying to sell it to you on affordability for today as opposed to what it can do in the future. And if you're buying it for affordability, then buy term. I mean, that's the thing. If you're buying it for affordability, not because you see the benefits of whole life, then you can't beat term for affordability. You just can't. By the way, no one in the history of mankind has ever bought term and invested the rest. It doesn't happen. Has someone done it? Yes. I'm just saying everybody and their mom says they're going to buy term and invest the rest. And the vast majority, what they do is they don't invest the rest. They invest some of it, but not the rest. I'm just telling you right now. So this whole thing that whole life is a scam, buy term and invest the rest. No one does that. I'm sorry. It doesn't happen. They don't have the discipline. Something comes up. They got to fix a tire. And they're like, well, I got to tap into this policy. I got to tap into my invest the rest because I have something. It happens all the time. All right. So we're going to get ready to get out of here and get tired. All right. I guess we got. All right. Talk about that. If I had $10K per month, are you going to pay the max on your Social Security payment? I don't think you're getting $10K a month on Social Security. So, I don't know. It literally depends on from where that $10K a month is coming. You're not getting $10K a month on Social Security. That's $120,000. Well, I guess if you had two maximal earners, each making $4,000 a year, that's if you fast forward that until you are at 70 until 2035, you'll be 70, 85 years old by then. Yeah, you still pay no tax. If Social Security is your only form of income, you pay no tax. I don't know the slightest thing about AMC and the squeeze to come. This is not the channel for that. So just FYI, I could care less. All right. I listen when I have some free time, which is not too often. I've been meaning to hit you up to discuss my financial situation. Right on, Raphael. Appreciate it. Robert says half in tax account, half in Roth. Yeah, right on, dude. That's fantastic. Half in tax accounts, half in Roth. Yep. And then listen to me every day. Perfect. People are getting triggered. I don't want my lawyer, doctor, or accountant to express their views to me. I'm not your lawyer, doctor, accountant, or financial advisor. Right. So we missed a bunch. I'm getting tired, folks. I'm gonna get out of here. You can see my eyes. Look at that. I'm getting tired. So I appreciate the super chats for my man Harry and Rob from Boston, and Harry from Oklahoma. Seemed like I had something else I want to say. I forgot. But anyway, appreciate it. Peace out. Thanks again for being here. And we will find that lady, the pizza delivery lady, and we will give her that money. So again, we'll make sure that gets done. Thanks, guys. Have a good evening. Get some squeep. See ya.